It is an early sector in the economic cycle, Kelly, and I think we've just seen the economy growth rate peak here in the second and third quarters. So I think it's going to be a bit tough for the transports in 2019, but there are good values, and I do see some opportunities.
Some of those names are the rails. You like CSX, Union Pacific, Norfolk Southern, airlines like Southwest and Delta, and FedEx. Why FedEx? I mean, it's been slammed this year, John.
I know, boy, they made the mistake of guiding lower during some of those really awful mid-December days in the market. The stock is now down 40%. The earnings outlook isn't that bad at all. It's going to be high single-digit growth this year, back on track next year, trading at about 8.5 times earnings. I think FedEx is a very good buy here.
What was so shocking about the guide down, John, about FedEx is that not only were they taking down numbers and their outlook, they're concerned about Europe as well as China, but it sounded like they were actually shrinking their footprint in terms of the network. I mean, it's one thing to take down numbers, it's another to actually shrink your footprint. Does that cause you more concern that this is not just being conservative about their outlook, that they're actually seeing some contraction?
Well, they certainly are taking steps to align their expense structure with the demand slowdown that they're expecting in Europe. I'm not seeing a big pullback in the footprint, though, and I do expect double-digit growth to pick up in about another year.
How about the railroads, John? Why do you have these names on your list for 2019?
Well, I think you have a couple of stories here in the railroads. You've got an activist investor, for example, in CSX Corp that is really pushing for increased profitability. You've got a company like Norfolk Southern that is already in the middle of its plan to improve profitability, and I think that's going to drive earnings growth even if volume growth slows a little bit. And we're not expecting a recession or anything in 2019 or 2020.
A big picture, John, would you say you're recommending these stocks because the valuations have gotten so compelling? Or are you recommending in other words, is this like they got so cheap and you don't see a recession, so you'd be an owner of them? But if people are worried about the economy, they should still stay away?
You know, I think these are the better names in the transport sectors. And each of these companies has increased its dividend at least 10% over the past 5 years. That's pretty rare, and that signals a strong balance sheet, a focus on shareholder returns, and some management confidence in the outlook. And you see that in these companies.
If the U.S. has the best growth globally, John, do you want to pick transports that are more U.S.-centric?
Yes, and so that would lean you more toward the rails than some of the, air freight. However, the rails do serve global customers, so you're not going to be completely immune. And I think that price point, the low PE ratio for FedEx, discounts a lot of global problems.